What's happening, guys, and welcome back to another Sunday Scan. If you are joining us for the first time, we are Investors Underground, and we're a community of professional traders, active traders, and every week we put out a watch list, a video watch list, to really go over, what are we thinking, what are we seeing in the markets, and then we break down what we're watching for the week ahead, and then we tie in a bunch of trading concepts and some setups along the way. So make sure that you hit that subscribe button if you are just joining us for the first time, and for everyone else, welcome back. It was a super eventful week. We have a lot to go over on Scan today. We had some mean reversion trades in the market, things like OKLO, OPEN, and a bunch of others. We're going to go over some liquidity traps, some mean reversion setups, some sector trades, and then I'm going to highlight a couple of maybe not necessarily under the radar plays, but some definitely unique sector trades around commodities. So make sure that you stick around until the end for that. Before we get into it, I will give the disclaimer now that I'm not a financial advisor, and these are not buy or sell recommendations. Everything I'm going to talk about is for educational and informational purposes only. And then final thing before we go ahead with the watch list and some of the market thoughts is that Anthony has a new interview out with Charles Harris, which is fantastic. So I highly suggest that you give that interview a watch. It's very insightful. So let's get into some market thoughts for the last week. So one of the big things that I saw was, especially in the more momentum sectors, we had a lot of mean reversion trades. And a mean reversion trade is usually defined as a stock that's been in play for a while. It's been in an uptrend, or it could be a downtrend, but it starts to speed up, and then finally it kind of mean reverts back to an overall trend. So if you were to draw a line, connecting these points around here, that's kind of like the bigger picture trend. And then within that, you get these pockets where you might have a short squeeze or something causes it to kind of go parabolic or deviate from the underlying trend. And what tends to happen is after those periods, you get some failed follow through, which just means that it can't really break out, but it starts to break down. And then you get a mean reversion or a flush back to that overall trend line. So we saw a ton of those over this past week, and Open was a great example of that. And we had some good mean reversion trades on this one. And I'm actually going to dive into a couple of concepts on this Open trade and really talk about what is a trigger level. So, in Investors Underground, we're commenting on this live. We're telling, what our positions are, what our thought process is, and really kind of going over all the details. So the setup that I saw here was after Open, it had this, nice squeeze out a couple of weeks ago, and it's really just kind of been consolidating within this range. And so if you were to draw a trend line, or rather just a resistance point up here, maybe, the upper 10s, 1080 or so, and then down here, you can see around that 880 mark, that's kind of been like another period. So from, over here to over here, this is kind of that big consolidation. So we had a squeeze out, we had some consolidation, and then we had another squeeze out. And so what tends to happen during periods like that is that you have a lot of short sellers kind of get blown out. And so if they've been, aggressively shorting into here, a lot of times they're just kind of getting stopped out. And so it can become less short crowded after a big consolidation with some squeezes like that. And what tends to happen is that if it goes on for, a couple of days or a couple of weeks, and it starts to get a little bit long crowded, you could have people who are, buying this breakout and then maybe adding to dips in here. And so what happens is that the longs in a setup like this, they raise their average cost. And so let's say that the average cost that the longs had, in aggregate or on the whole, was around 950 or something like that. So when I see a setup like this in a channel, and I think that it's less short crowded and more long crowded, I'm looking to define where is that possible base and where is that resistance. And if I see that the price is testing that support level, and I think it might break through, that level, which was about 880, that is known as a trigger level for me. And a trigger is really just a point on a chart or a point in time that causes either longs or shorts to stop out. So you could also have a trigger point, on the upper end of this, and I'll get into some of that with some liquidity traps later on. But in this case, the trigger point that I was looking at was that 880 mark. And basically what that means is that if I think that it's less short crowded now after this consolidation, and it has a lot of longs in there, and the longs have a higher average price now, or a higher average cost of them being in, I think that most of them were probably using around that 880 mark as kind of like their support level, and they're risking off of that. So if it starts to break through that 880, I think a lot of longs were going to be like, hey, this is breaking down, I'm going to start to stop out. And those trigger points can cause, massive flushes. And so we had a big flush from that 880 all the way down into, 680s or something like that down here. So kind of filling the gap from where it came from. So that's a really good setup to keep in mind, that after a name has had a big squeeze and it's consolidated, maybe squeezed out again, and you have a bunch of volume kind of churning up here, you want to identify where's the resistance, where's the support, kind of on a bigger picture. Of course, there's many different points of support and resistance within that. But if I see that it's kind of breaking down and testing that floor, and I think it's going to get through, I want to identify what is that trigger point, and then, draw a line there, or however people want to go about it. And if it starts to act heavy against that level, like it's going to break and hold, then you can usually assume that it's going to have a big flush following that. So we got, I got, I think 850 strike puts on this, kind of anticipating that this breakdown would happen. And then as it broke down, then I was able to cash out on those puts for 100% or more in some cases. So, when I'm doing an options trade like that, thinking about kind of like a broad directional play, usually what my goal is to try to make the trade as free as possible. So that means that if I got the 850 puts, and let's say it was 40 cents a piece or something like that, as it's working, I'm trying to trim off and make the trade free. And then, once it's up 100% or so, you can put trailing stops, or you can cash out half of it. And then you have a free trade basically to, continue on that as long as it still looks like it's playing out. So that was a good example of kind of identifying a channel and identifying where that trigger point would be. And then that was one case where, we were able to have a great trade on that, and that was all done live in Investors Underground, which was great. So Open was a good example. So that was kind of like the trigger and the channel identification there. And so now if you kind of zoom out and go back into like a bigger picture time frame, it's really just a mean reversion, most likely within a broader uptrend still. You can see how it soaked. It started to build again. And so now it's coming up to some of those key levels. So really, what I'm looking for in the days and weeks ahead are more, if you were to draw a line around here, is it starting to base above that 880s mark again and starting to build for that next leg? Or is it struggling here and then maybe it has a fail to follow through and has the next leg down? So that's kind of a broad, area to watch for that one. So going on to BE. So finally, this one had a nice mean reversion trade too. We've been talking about this one on Scan forever. And Stan and I were actually talking about the importance of, really starting to take profits as this is speeding up, because it's almost, it's never a certainty, but it's a high probability setup that eventually on names that are going parabolic, they will have that mean reversion. Again, that just means going back to the mean or the average trend line. So again, if you were to draw a smiley face looking curve, a crooked smiley face up here, where are those points roughly trending over time? And you can see it's still maintaining that, but along the way it went parabolic, and that makes it more vulnerable to a flush. And another good concept about a name like this is that it had an analyst rating, or some analyst comments that were not very praising of the company. And so talking about the valuation, some other things. So a lot of times when you have a stock going parabolic and then you get what I call a counter trend catalyst. So it could be an analyst downgrade. It could be a negative comment, could be a short report, could be a piece of bad news, could be a lot of things. That makes for the best mean reversion trades. And again, that usually causes a big flush back down to the overall trend line there. So good commentary on BE over the last, couple of months. And, really that was the mean reversion trade that we were kind of on watch for. And so the importance of, if you're swinging a name like this, to be cashing out along the way, you're handling something like this from a position of strength, or you can even capitalize on the downside there as well. So the next name that I want to really comment on was this APP. So this is a name that has been on, watch after it was added to the S&P 500. And basically when a name gets, announced that it's going to be added to the S&P 500, a couple of things happen. One is that the announcement happens, and that's usually after hours. And then you basically have what are the knock-on effects of that. So for a name with a market capitalization that's as large as App is, basically when it gets announced as going to be added to the index, people start to front run the index actually buying it, and then the index has to buy it. So basically, if there's a very large market cap, the index needs to buy a certain amount of that to make it, have a proper weighting in the overall index. So the bigger the company, the more the index has to buy. And so what you're seeing right here is after the announcement that it was added, you really have this huge parabolic move, and that is just index buying, front running, all those things. So really what I'm looking for now as we get into the end of the month, and now, as it gets officially added to the index, and all like the knock-on effects of like other, indices that have to mirror the S&P 500, like once they're all done adding, you're looking for this to basically start to stall out at some point, and then it can be very vulnerable to that mean reversion. Because again, what was all the buying caused from? And it's from being added to the index, and then people front running that, other indices getting the proper weighting. So you have a lot of unnatural, I would say, like unnatural or unsustainable buying happening here just to get the proper weighting to the index. And then when that's done, sometimes you set up for some big mean reversion trades. So that will be on watch. But it's really just kind of commenting on, this is the action around some of those index ads, especially for very large names that are stocks that have a very large market capitalization. Again, on the mean reversion theme, you have OKLO. So this was an interesting one. This one went totally parabolic over the last week, or 2 weeks or so, and then it really had a counter trend catalyst, like we talked about before. You had some negative comments there, and then this is pulling back, to a broader trend line. But what can also happen is that sometimes, instead of just being a mean reversion within a larger trend, sometimes that's the end of the trend too, at least short term. So what we could see in something like this is if it breaks down and then it's consolidating and it breaks these lows here, then sometimes you can have a trend reversal. And at least for short term, it can go back to kind of where it was consolidating before and just chop around for a little while. So into the upcoming week, that's something to really pay attention to. But again, understanding that these are trends that are in place, they speed up, and then they have some kind of a counter trend catalyst, and that can cause a big mean reversion trade back to a kind of broader overall trend line. And then depending on how they act around there, they can either start to base again and continue, or they can have that failed follow through, which means they can't break above the highs here anymore, but they can break below the lows and head back to a longer term kind of base. MP is another one, very similar. So again, full of these mean reversion trades. This had a counter trend catalyst. There's some rare earth startup company that's saying that they might be able to eliminate some of the need for a U.S. kind of rare earth supply chain. So that, shook out some of the positioning there. And again, sometimes it's not just the news, sometimes it's the positioning leading into the news. So if we were to kind of go to the hourly here and see that, this has been definitely in play for a while, and then kind of a false breakout here, and then that counter trend, catalyst, and then it's breaking down into these levels here. So we'll see if it continues to, stay heavy, then you have a lot of people who might be long from this area. So just like we talked about with open, if it, in a broader sense, if it were to start to break under some of these levels, then I think you would really see a big unwind. But again, these mean reversion trades are very common. So as long as it's holding these levels, the trend is most likely still intact. So I'll get into like the main watches for the week ahead. Some of these are on watch, but really we'll zoom in on some of the names that were very in play and will be in play for the next week. So RGTI and all the quantum names. So I had puts on IONQ, and the quantum names were really on watch. And they had slight mean reversions because they've been running so much, but I really didn't get the trade that I wanted to it. And it was basically flat. And this goes into a broader topic of like studying sectors, studying trends, and then when do good mean reversions happen and when do they kind of stall out, or when are they a little bit more choppy? And for a sector trade like the quantums, after digging in a little bit further, I saw that they have some upcoming catalysts. They have some conferences and events. There could be a White House kind of announcement there. So what makes for bad mean reversions or very choppy mean reversions, kind of on a bigger picture scale, is if a sector has something to look forward to, because it's hard to get a full clean mean reversion when you have that upcoming catalyst. So, that's something that I make note of. And for next time, you're always trying to refine and get a little more clear on why certain names mean revert really well and why other names don't. So if you were to compare something like, IONQ and compare that to OKLO, this is a name that doesn't have an upcoming catalyst, and these are some names that do have upcoming catalysts. And you can see how much better the quantum names really held up. So these are on watch. If they can consolidate, they could potentially have another leg higher, in my opinion, if they have upcoming catalysts, and then maybe around those catalysts, if they're not up to people's expectations, then you could have a full mean reversion. But for now, I mean, they're really just kind of hanging in there. So I would assume that there's probably some news that's being anticipated out there, and as long as that news, people are waiting for that, especially the big players in the stock, then mean reversion becomes much harder. So the more that these just kind of consolidate and build a base, the more likely it is that they have the ability to do another leg after some consolidation. So have to keep a very open mind with these. Yes, you had some mean reversion here, but the way that I was playing it with puts, it's a much more difficult trade unless you're just kind of holding something for the whole week. But if you're more intraday and trying to nail one of these and a big move, this was much more choppy than I would have really liked for that. So another name on watch is this RR. So this had a bunch of bullish options flow for, I believe, sometime in October or a month or so from now, and basically at higher strikes. So there could be some kind of upcoming catalyst. This already had a big mean reversion, and now it's starting to perk back up again. So no hard bias on this, but given the bullish option flow, if that was just a regular mean reversion and it's kind of returning to a broader, longer term trend higher, then with the robotic space, then this could be potentially a name on watch for some upside. So what I'd be looking for is to see if it can base above some of these levels here, 450 or so, and then be on watch for continuation higher. The next name I'm going to get into is this DVLT. We had a good liquidity trap trade on this in Investors Underground, called out live. So what a liquidity trap is, for those who might not be super familiar, is that a stock that has a big move up with a ton of volume here, and then it consolidates for a couple of days, sometimes 2 days, sometimes 3 days. The volume really dries up, and then you start to have some buy-ins. So basically the whole concept of like T+1 or buy-ins is that if you have a ton of volume here, a couple or tens of millions or hundreds of millions of shares traded in volume, a lot of that is from short sellers. And so what happens is that some brokers don't actually have legit borrows, and so it's based on a calculation. And if they're basically if people are allowed to short more than there actually are shares available to short, then at some point the clearinghouse has to make that all match up. And so what happens is that if a ton of volume trades here and just consolidates, in order to make those trades all match up, the clearinghouse will sometimes force buy-ins through brokers, and they'll basically say that people have to start to cover. And so that can be one way how after a couple of days, for a stock that was short crowded, had a ton of volume and consolidated, sometimes that buy-in can start a actual short squeeze. So what you're looking for with a liquidity trap is really that first, big move, that volume there, consolidation, volume dries up, and now you start to get some buy-ins or forced covering with some, other covering, and then some momentum. The volume comes back in, and you usually have a similar move to the first leg. So, whatever this was, you can usually assume that it's a similar, move on the next leg when it triggers. So again, going over those trigger points, just like on OPEN, using the channels. So in OPEM, there was a downside trigger. In this case, there was an upside trigger. And what you're really looking for is if you were, a short seller adding in here and here over those last couple of days, your average would probably be somewhere in the mid 70s to upper 70s, or sometime, maybe even in the upper 60s or something. So what you're looking for an upside trigger for a short squeeze is you're looking for the price to start to tick above the average price that the short sellers are in, and that can cause them to start to stop out. And if you have the buy-ins already happening, and you have the other shorts that aren't necessarily forced to get buy-ins, it can just be everyone has to cover at once, and that is what causes that large move, because there's not a ton of liquidity, but everyone has to cover, and that is just basically a form of demand for the stock, and that can drive it up. And you can see very clean trends until basically that supply demand imbalance breaks, and then you had some flushes. So that's kind of one concept there with liquidity traps and triggers. But then another concept here is what we call a compounding liquidity trap. So in some names, a liquidity trap just happens one time. In other names, the cycle repeats again and again and again. You can have 3, 4, 5 liquidity traps, or perpetual squeezes happening in a stock. So basically, you had a version of a liquidity trap here, and then consolidation, and then triggered here, and then consolidation, and then triggered here, and then consolidation and triggered again. So sometimes these just go on and on. And so if you have these on watch, they can get very short crowded over time, and you're just looking for these points where they really, start to hold or base. Sometimes you have some big flushes and then they soak right back up. There was a catalyst here, some kind of news. There's likely some kind of dilution at work or in the future works here, but until they actually dilute, sometimes just the press releases can trap a lot of people and then it builds, trap a lot of people and it builds. So for the week ahead, I'll see if this can hold some of these bases, and then if it starts to tick up again, it can just be another form of liquidity trap and squeeze out people again. So that's kind of an overview and deep dive into DVLT until they actually dilute and they actually, make the share count go up, or they kind of, put a bunch of supply into the market. These can stay pretty tightly held until that actually happens. So it's a good one to keep on watch for liquidity traps until it eventually blows everyone out. And then if they dilute, then it can have a ton of downside because, again, at the same time where shorts get squeezed out, if you have dilution, a lot of supply comes online, and then it can really cause a huge trend reversal. But until then, it's on watch for a perpetual squeezer. Tesla. Big, powerful name that's been building. It had a huge move up here, a lot of consolidation. So this might look like a liquidity trap, but it's not. This is a large cap stock, so it doesn't have the same dynamics. But what you're really looking for here is, a big leg up, some consolidation, then just a classic breakout. If the market stays somewhat bid, Tesla tends to be a go-to name for, speculative hot markets. And so it's consolidating around some prior resistance here. And maybe if it bases above, it could be on watch for a break to, near all-time highs or somewhere around that point. So Oracle on the other side. So this is a name that has been a big failed follow through kind of on the daily chart. So you can see big earnings gap up here. And then they basically made note that OpenAI was responsible for a lot of their backlog. And that's why the earnings and everything look so good, or the earnings call sounded so good because that giant backlog. But once it came out that OpenAI was responsible for most of that, it's kind of been consolidating here. And now you have an upper base and a lower base. And this was kind of the trigger point around here. And it's starting to break below. So this could just mean revert back to kind of the area where it started from if this continues to stay heavy. So that will be on watch for me for puts in the week ahead. And then gold. So this is an interesting one. It's been an absolutely perfect environment for gold. You have, some inflationary pressures. You have some Fed easing with cutting rates and everything else. And basically, the short end of the bond yield curve is, steady and going low. And then the other part of the bond yield curve, like the longer dated stuff, is going up. And that's just a good environment for gold as that curve steepens. So basically, gold's been in a perfect environment for a while. And you have these gold names like the royalty and the streaming companies like WPM and SAND. Basically, how these companies work, they're precious metals companies, but instead of actually mining the gold or the silver or the precious metals that they're involved with, they basically have deals with other mining companies where they give them cash, and in exchange they get a royalty on whatever the people mine. And so sometimes those royalty deals are from 3 years, 5 years, 10 years ago, but they still get, a certain amount of the metal at a certain fixed price. So I remember I did a deep dive on WPM like maybe 7-8 years ago. And when I last looked, and this is, I'm sure, been updated since then, but they had like an average cost of somewhere of like, $10 for the price of silver, and maybe 2,000 or something like that for the price of gold, or maybe a bit less. So basically, if they have like a fixed rate of what they get the metal at, and gold is now at 3,700, 3,800, basically just their margins expand over time. And that's the benefit of those royalty and streaming companies. They can be a lot more steady and a lot more profitable than some of the even just the regular mining companies. So that's why these have been trending so well. And then kind of the final one. So gold has been in a great uptrend, and basically until some factors change, like until you have different inflation data, or different things happening with the bond curve, or different things happening with the US dollar, like if the dollar were to spike, that can cause a big mean reversion. But until then, gold is just in a steady uptrend. So the last name that I kind of have on watch here is this SII. So this is Sprott Inc. And so I used to do a lot of work in the natural resource sector, and this was always a go-to name. Sprott, a very reputable name like the precious metals and the commodity space, and they basically have a ton of funds and assets under management and everything like that, but it's all related to natural resources and commodities. And so, this has been trending really well, basically from this commodities bull market. You can see a nice steady name here. But I remember listening to an interview years and years ago with some of the higher ups in Sprott, and they said that during the next real bull market cycle that they would be open to potentially selling their company to a like one of the big investment banks. This was like an interview on YouTube or something like that, and they were talking about it at a conference. That kind of, if you were to look at like the overall natural resource business, it's usually good to cash out into a raging bull market. So that's something just to keep on watch. A good trending name, but also a potential buyout candidate in my opinion. And I guess we'll see over the next few months or something like that. But basically, as the bull market goes on, these guys are pretty smart, and I think that if they sense that some of the trends might be changing in the near future, they'd probably be more open during a time like this to a potential acquisition by one of the big investment banks. So that's something that I keep in the back of my head just for like breaking news trades or things like that. Because if you were to see a headline in the coming months of like, hey, this they're getting a potential buyout offer from this person or from this company, then those going to have some huge moves. So not only do you have good technicals, good cyclical things, good margins, everything's going well, but you also have a potential takeout candidate, in my opinion, based on some of the things that I've seen in the industry over the last couple of years. So that was kind of a unique one that I had on watch this week, not necessarily for this week, but more just as this cycle of precious metals and commodities goes on. It's just kind of an interesting one to keep in the back of your mind. So those are really the things that I want to cover for this week. Again, we cover all types of markets, all types of setups in Investors Underground, and then you have myself, Nate, Stan, Judah, like all these people, all these moderators that are basically they specialize in their own thing. And then we're all trading together, in real time and sharing our best ideas and really just kind of walking through our thought process. And the goal with Investors Underground is always, it's really to teach people how to fish, teach people how to be professional traders, how to think about stocks, how to think about setups, risk management, reward, probability, and all these different things that kind of go into like trading for a living and trading on a professional level. So, some people get that through joining like prop firms, and some people are professional traders that way. And other people who are more independent traders, they might, gravitate towards a community like Investors Underground, where it's not just necessarily, people who come in for a hot market, but it's people who are here, cycle after cycle, people who do this for a living, and people who really, work together to trade to the best of their ability. So check us out at Investors Underground. That's all I have on my front. So basically, I hope that was useful to everyone, and I will see everyone in Investors Underground. Have a great week ahead. Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.